happy Thursday. How you doing out there? You guys having fun yet? Oh, what a good time to be in the markets there. This is our quick stock market update show. We'll go over the good, the bad, and the ugly. Every day, other day is good, every other day is ugly. So we'll cover all of that here for you today. I hope you'll check us out at jazzwealth.com. If you have IRAs, rollover IRAs, Roth IRAs, or you're just getting started, you can check us out there at Jazz Wealth. Hope you'll consider opening or transferring an account to us. You can also schedule a call on the website. Just keep in mind, we can't give you specific advice. So if you call asking about investments and things, we kind of have to tell you no. We get in a lot of trouble for that, so just keep that in mind. But we're also playing a game. It's called Guess the Dow. If you'd like to play along, jazzwealth.com/guess the Dow. Our winner last week had guessed 3,056.69 and was the winner because there were no guesses that were above that, and rightfully so. I mean, the markets kind of did what they did. But you're welcome to take your shot there. We'll give you a $100 gift card if you're the winner, or credit your account $100. And the hint there, if you have multiple accounts with us and you're a customer, choose the Roth IRA. We'll do it for you if you do not. All right, so that's what we have there. We also have our class tonight coming up. Every week we do a class for customers. Tonight we're going to go over our portfolios, give you the update there. We also have some really interesting studies from the research team here to kind of show you some of the things that we're studying and just some fun stuff in general. So we'll cover that as well. If you are one of our customers, just log into the dojo. You'll see the video library there, and tonight's class is right down here, the portfolio update. While you're waiting, you can watch certainly any of the classes from previous weeks. There are a ton of them now because every week we add a new one there. So I hope you'll join us for that later tonight if you are a customer here at Jazz Wealth. Anyways, let's talk about the stock market today. You got 969 to the downside on the Dow. You got 105 lower on the S&P and 279 on the old NASDAQ there. Wow. Oh, your jazz artist of the week, by the way, Dave Weckl. And he has a song, it's called The Zone. It's really a classic kind of one of his, more of a fusion jazz thing there, but just kills it. A really great drummer there. Anyways, let's talk about the markets here. So you got the S&P 500, a little weaker today. We're playing this back and forth game as we go along here. The NASDAQ does outperform the S&P today. The Dow was your underperformer. We've got just another round of lowering guidance from companies out there that are kind of suggesting how the coronavirus is going to affect them. So a lot of repricing going on in the markets overall. You've got an increase in the virus headlines. I'll give you some of the stats on that a little bit later. Events being canceled and schools being closed and all that good stuff. So that's a focus, of course, and that kind of helped with our markets lower today. You lost about 3% on the S&P there. The Dow bounced around, basically hovering around that 1,000-point area. I drew the line here just to show you kind of where we're at in terms of the overhead technical resistance, if you happen to follow that stuff. You got the Dow, we talked about it yesterday, right there at that what's known as a ceiling, the bottom side of the uptrend there, and that getting rejected today, at least in the short term. I'll continue to say that this is our range, right? You got the lows from last Friday, you got the highs from the other day, and that is the range that we're kind of chopping around in. I kind of expect that to continue into tomorrow. I don't see any reason why people would be excited to buy the market going into the weekend again. And so this is your range. I mean, that's basically what you're expecting. 31.35 down here to 28.50. A huge range overall. In the Dow, you can kind of highlight your range there. You got a lot of Christmas tree trading, and if you don't like looking at candlesticks, well, I got a little chart for you here today. Here's the recent wild ride in the Dow, just breaking it down by day. 1,000 points to the downside, a couple quiet days there. You can kind of see leading up to this week what happened last week. You had the record gain there on Monday. Followed by, of course, the retracement, and then second all-time record day yesterday, and today another 969 points to the downside. The pressure remains to the downside. As long as that 10-year yield is under 1%, man, the pressure just stays there to the downside, and I think that's gonna continue, to be honest, right? So anyways, that's what you have there. The S&P now 11 days of having a range of 1% or more, plus or minus, and so that continues there. Remember the emotion that we talked about. There is emotion from traders on the upside, or investors that are saying, when this thing bounces back a little bit, I'll take some of my losses, I'll get out of the way, I'll rebalance, do whatever. And so any move to the upside is going to be met with emotion. Anytime it's met with emotion, in this case fear, you expect to see a little selling. The downside move, you have people on the downside saying, I'm looking to put money to work. If I can get a downside move, I would be willing to put money to work. I have a lot of customers here saying the same thing. And so in the meantime, everything in between is a wait and see, right? Everything in between is, well, if we get here, I'll do this. If we get down here, I'll do this. But in the meantime, I don't know what to do. And that's the kind of emotion going on in the stock market right there. We'll take a look at bonds. You got the 10-year hitting new highs today. The yield hitting new lows. 0.899% was the low of the day. That is a warning sign. That continues to be a warning sign. I'll continue to say that. Why is it a warning sign? Think about what's happening here. People are running to bonds. They're buying bonds for safety. They look at the stock market, they say, well, I don't know what to do here. I'll go buy bonds. That's safe. It's protected by the U.S. government. They're supposed to pay me, and that's fine. They're not paying you very much, 0.889% on the 10-year. That tells you that people are volunteering to take a loss, a net loss on their money. What do we mean by that? Well, if you were to buy a bond that yields 0.889% and you held it for the 10 years, making the 0.889% a year, inflation at 2.2% eats away at all of your gains and then some. So you end up with a loss. And so that's why it's a warning sign, is because people are willing, from all over the world, they're willing to voluntarily take a loss just to be safe. That tells you the type of fear that's really building in the markets as well as in the bond market there. So I just want to point that out. I'll keep pointing that out. Not really a good sign overall. And that's why I say the pressure remains to the downside until that bond yield starts to creep back up again. It's great news if you're buying a car, buying a house, whatever you're doing. But other than that, crazy. Anyways, in the Dow, your stronger performers today, Walgreens Boots Alliance ends up with a little bit of a gain on the day. Walmart was second in line, although it was down on the day, but only 0.73% compared to 3% in the overall Dow there. On the downside, you've got United Technologies losing 9%, hitting new lows in the meantime. You got Boeing in the mix, of course, new lows there as well, 8% to the downside. And ExxonMobil, anything oil related, was weak on the day. Exxon down 4%. That was the weaker ones there. In the S&P 500, your strength comes from Citrix, 5.75% to the upside. These are the guys that make WebEx, right? So teleconferencing software there, one of the more popular ones out there. And of course, you can imagine around the world, all these conferences are being canceled, from Google to Facebook, everybody up north on Wall Street, all canceling these meetings, but they're still having them. They're just having to use services like Zoom and Citrix. So that one was stronger there. Kroger was one of the stronger ones as well. We own this one, so happy to see that. Something good out there. 8% to the upside. They had earnings, really good earnings actually. And Newmont, we'll call it the darling of the gold mining sector, hitting new highs as well, up 2%, and gold being higher as well. On the downside, I'll just probably say this a few times. On the downside, you've got cruise lines and airlines. Those are the weak ones there. American Airlines hitting new 52-week lows, double-digit loss. Alaska Airlines, new 52-week lows, double-digit loss. Royal Caribbean, right? You can just kind of pick your stock here. Double-digit lows, and in fact, the majority of all of the double-digit losses today in the S&P came from the airlines or the cruise lines. Carnival Cruise Lines losing 14% on the downside. Let's take a look at your overall sectors today. Every sector, all 11 sectors of the S&P lost 1% or greater. Weakness was in financials. Let's start with the transports, down 5% on the day, hitting new 52-week lows. Actually, that's a 14-month low, by the way, if you want to dig a little bit deeper. This was one of the weaker areas of the markets today. It was really broad weakness from the railroads to the airlines, but the airlines stuck out, as I mentioned a minute ago. American Airlines, Alaska Airlines, even JetBlue. If you're looking in there, JetBlue and Southwest, just horrible. Southwest was the held up the best, as you would say. Lost only 3.5% on the day there. They came out with they lowered their guidance. What'd they say? First quarter revenues will be impacted by $200 to $300 million because of the virus, but they held up the best overall. And they're regional, right? They're not necessarily traveling the world like United Airlines and the like. Financials were the other weak area of the market, down 4%, almost 5% on the day. Regional banks as well. Remember, regional banks are going to get hit a little bit harder because they don't have as much exposure to trading, investment banking, commercial loans, things like that. They're more focused on general loaning of money out there, and with low rates, that's not a good sign for them. Industrials down 5% on the day as well, retracing everything that it had gained from yesterday. That's going to be your Boeing, United Technologies, Raytheon, things like that. Those are the weak ones there. In the retail space, not too bad, 3.5% down on the day. It was really broad weakness. You had some standouts, being Kroger, one of them, with their earnings, and Burlington had really good earnings, actually. Burlington beat earnings by 2 cents. Revenues came in as expected. They did lower guidance going forward, but despite Target, Big Lots, Walmart, they had a good holiday season. Who'd have thought? Burlington stores. I haven't been there in years. They had a great holiday season. Sales was their strongest quarter to date. So really good day for them in terms of earnings. Stock was still down about 0.5% on the day. So that's in the retail space. If you look into the consumer staples, we'll use the XLP for that one. Not bad, but Clorox stands out as your big gainer there, up 2% on the day. Oil. Let's talk about oil because you got the OPEC thing going on here. Lost 1.6% on the day. OPEC has proposed, not official yet, but they've proposed a 1.5 million barrel cut in oil, barrels per day, I should say. Now, the deal with the proposal, if you read through it, is so it's 1.5 million barrels, but Russia has to accept 1/3 of that. So the question is, oh man, we had Russia. They were there. They were willing to be a part of this. Now you're asking them to be 1/3 of the global of OPEC's cut in production there. We'll see what happens. We're going to find out more on that one there tomorrow. Nonetheless, the price of crude oil was lower on the day, and that took down the other stuff with it. Your oil service, oil exploration, things like that. XOP being one of them, if you want to take a look. New 52-week low. Interestingly, I don't have a cool way to show this to you at the moment, but you have XOP now lower than where it was when oil last was at $28 a barrel. We're at $46 a barrel right now, and XOP is much lower than where it was when oil was at $28 a barrel. That's all debt related if you care to dig into that at all, but just kind of an interesting thing there. Gold had a good day today, up almost 2%. Safe haven trade there, all looking good. And the volatility index, the VXX, was up over 24% on the day. The old slogan from a radio host down here in Florida is, when the VIX is high, you buy. When the VIX is low, you go. And so that's his phrase, his way of saying when volatility is high and everybody's freaking out, that's when you find opportunity, you get in there and do something about it. So I thought I'd point that out, my paying homage sort of quote of the day. Zoom higher by 7%. They beat on earnings. Remember, they had a great earnings report. The stock was down by as much as 8.5% last night. It did open lower on the day, but finished very strong. You had analysts out there going, we have no idea why the stock was down after hours. And once everybody figured out, we don't know, everything looks good, you saw the bulls come in there. Pretty much from the open, everything looked good for that stock today. Marvell Technologies, this is a semiconductor stock as well, up 10% on the day. Marvell reported earnings. They beat by 1 cent. The revenues came in better than expected, and they raised guidance going forward. So it just shows the difference when a company raises guidance in this sort of environment versus keeping it the same or lowering it, the reward that they get. So there you go. Snapchat, ticker symbol SNAP, added 1.6% on the day. It's down 30% from its high. So this high over here, down 30%. MKM came out today. They had an analyst that said this sell-off here is an attractive entry point. That's their fancy way of saying, we think you should buy the stock where it's at right there. That's their opinion, not mine. You got the 50-day, 17% of the stocks in the S&P 500 are above the 50-day moving average. Slight downtick there from yesterday. You had 7 new highs in the mix. We'll go over and take a look. It was Campbell Soup again, as people are storing up on their canned goods. So Campbell Soup hit 52-week highs again. You had Clorox, which we mentioned already. Newmont we mentioned already as well. And Kroger was another one there with their earnings, so looking good. Also, WEC Energy hit new highs as well in the utility space. Did close down on the day, but hit new 52-week highs. You had 82 new 52-week lows. That's going to be airlines and cruise lines will dominate the worst performers in that space. We don't have to go through those again. You also had MGM hitting new lows. 82 new 52-week lows. They all closed in the red, by the way, so every one of them was down on the day. 11% lower for MGM. Wynn also lost about double digits as well, breaking the new lows. And Southwest Airlines, they did hit new 52-week lows, but they fared the best on the day. They lowered guidance. We mentioned that already. And so that's what you have as far as that goes. As far as the virus, got some stats with you. We may share some more later with our customers, but 53.7% of all reported cases with all the data that they have have officially recovered. So over half of all of those that have been officially diagnosed with the coronavirus have recovered. There's only a 3.4% death rate, and the majority of that comes in the elderly. I mean, it's kind of like the flu, where most people can survive it, but sometimes the elderly don't have the immune system to keep up. The number of new cases in China is not really the issue. It's down to 0.15% a day. Right, so they've been hit, and now they seem to be working past it there. Italy is the issue, man. Italy and South Korea's got a lot of cases, but the number of new cases per day is just not as much. Italy saw new cases between yesterday and the day before grow 23.5%. It is not looking good for Italy there. And so that's part of the issue that you see there as well. I saw in the news there that a Robinhood trader has a dad that's a lawyer, and they're going to go ahead and try to file suit against Robinhood for messing everything up there. So if you want to be a part of that, I guess. I'll see what happens there. You got 4 Fed members speaking tomorrow. Remember, when things get a little shaky, they go out and they start talking. We had 3 of them today. We've got 4 of them tomorrow. They're busy. They're earning their keep there. So you got speeches all in New York by Fed members tomorrow. New York Fed members, by the way. All right, as far as what do we got here? No earnings tomorrow. You've got FedEx paying out 65 cents in dividends. Molson Coors paying out 57 cents. Dunkin' Brands 40 cents. Kansas City Southern 40 cents. Cheesecake Factory 36 cents. And CenturyLink 25 cents. And that is all of them there. I'll take a chance here and try to answer your questions if you happen to have any. And we'll see where we go from here. Cruise lines. Oh, you get a little trouble with the cruise lines there. Yeah, they're still suffering. I agree. It's a discount. It's just now it's like, okay, we got this falling knife. Where we try to pick the bottom there? That's a tough one. Just for fun, I started looking around for different flights and stuff. Super cheap. Right? Started looking at different places I would go in like May, June, July. Normal summertime travel that would be more expensive. A lot of good deals on flights out there. I don't know if this is maybe the time you want to buy that travel insurance just in case, but good deals on flights there. You're confused about with what to compare XOP with. By the way, if you're watching on Roku, I'm just looking at questions on YouTube here to help if you have any questions. USO doesn't really match, it's an exploration stock. Well, that is your comparison. So that is your ETF, that is your subsector of a sector to be using. So you'd actually be comparing the performance of individual stocks to the XOP. There would be nothing really to compare it to because that's not really its own category. There's no sub-index that you could look at for that one that I know of, as far as I can tell. So that is your benchmark. Yep. The noise does. I'm sorry. Yeah, it does. I've gotten used to it by now, but it is a little annoying. It is windy as can be down here, which I think means it's about to get cold. Yep. What are your thoughts on the cruise line stocks? The knife is falling hard and fast. Yeah, I'll keep the same comments even about the markets here as well. There was an analyst the other day that had a great comment. He said, this is not a time to be a hero, but it's time to step in a little bit. And all he was trying to say was there's no need to really commit a ton of money or go all in at this point, but it sure is a great time to take a little piece and step in, right? Take a little piece and step in. I tell our customers if you got weekly deposits, it's time to raise them a little bit. Going to share a cool little stat with you guys later on that one to expand on a study that we did. That's the same thing with the cruise lines, the airlines, things like that. You can't help but notice the discount over here, but I don't know that we need to go loading up the boat. If it were me, that's kind of how I would be looking at it there. Yeah. Yep. Why don't analysts say to buy ETFs for long-term investments? I don't know that they all do that, but remember, analysts have a specialty. It's kind of like a doctor. So doctors have their own specialty. They naturally don't do everything. Family practice doesn't do surgery. Nephrologists don't do cancer patients, things like that. But in the stock market, analysts have a specialty. So it'll be like a retail analyst. And so his focus is on the individual stocks. His level of expertise, his research, and everything that he's doing is based on individual stocks. He'll have 3 or 4, sometimes only one, that they're responsible for covering. And because of that, they're not really looking at the sector. They're looking at how this particular stock would compare to the rest of the market, or rest of their sector. So in that case, you don't have them really focused on that. It's not their level of research that they do there. That's probably the main reason. I don't know of any broad market analysts. Usually they have an assumption where they think the S&P is going to land, but that's it. Is the Qs considered a long-term hold by most investors like yourself, even with low actively as a trade in the short term? So that's your NASDAQ ETF. That's the most popular one. I don't blame you for looking at something like that. It's an index, right? So when you look at having an index fund in your portfolio, I don't have a problem with it. Yeah. Not like me sounding all negative and scared. I wouldn't say it's negative and scared. I just don't want to be the guy that's like, all right, I'm 100% in, and then with this market, you're 10% off or something crazy like that. I think it's time to step in. I like these little discounts. I'm a counter trend guy by sort of blood, I guess. So when I see things fall, I get more excited than when I see them just trend higher and higher and higher. So it is good to have the action. Yep. Is biotech an opportunity? I don't really follow biotech. I don't pretend to understand that. I know it's big money if you do, if you're an analyst in that space. Just not my area there. Plus, I don't know what's in the spending bill, like how they're spending that money. I know some of it is going to uninsured patients that do come down with coronavirus to help cover those bills. So it's not necessarily all based on funding companies to then go find a cure, a vaccine or anything like that. That's already in progress. Yep. Your 401k has very few choices. Is the Russell 1000 a decent core holding? That's tough to say relative to the other choices you have. You should have a good list. I mean, maybe it's not the biggest list you've ever seen, but you should have a good list that maybe includes some target date funds and a couple others in different categories. If that's the case, you may have to find a way to mix the target date fund with some of your other funds in there if you're looking for a certain level of performance. Sometimes we have to do that. It's getting better out there, but yeah. Oh man, you finally got a new job, you're ready to dive back in. Good timing, right? I love it. You got a new job, you got a market here ready for some discounts, you're ready to contribute again. I like it. Why does CNBC intentionally try to make the public panic? I won't say that that's what they're trying to do. I think it's more eyeballs, right? If you look at the view count on this show that we do over the last week versus over the last month, you have more eyeballs, right? And so that's good. I mean, if you're watching this, chances are you're watching CNBC. And so they know that, right? It's just a chance to have more eyeballs stay on the channel after 6 o'clock when Shark Tank starts and everything. So it's marketing. I think it's just a way to keep you watching. And that's not a bad thing. That's any other channel would do the same. It's like the other channels with election season. That's what they talk about. There's other things happening in the world, but that's what keeps the eyeballs on there. Yep. Any suggestions on analysts when it comes to price a stock? I'm not sure the question there. You think you're asking like, what analysts are better at pricing stocks there? There's always a handful of them for every sector and for every stock. You can actually sort them. What's a free site you could use? Is there a free site? Maybe Tip Ranks. If you look up that site, it'll show like how the analysts do compared to each other based on their suggestions. That might, if that's what you're asking, that might be something to look at there. Yep. Ooh, emergency fund saved you from building up some debt. There you go. There you go. Which trading platform shows if traders sold calls or bought calls? I believe most of them do. You should be able to see that whether it was sold on the bid or bought on the offer. That's really what you're looking for. It won't say whether the order was initiated as a sell, but you could see how much was sold on the bid versus bought on the offer, I think is what you're asking there. Yep. I know that INO has been popular. People are looking at that. I don't like the idea of chasing something. It's 22% to the upside. If you owned it, you'd have to be excited about the gain. You'd probably be looking to peel some off a little bit. I don't know that I'd be running away trying to chase that. I don't like when that happens. And that's also in the biotech space. This is what happens. These are very difficult to try to judge. Yep. Oh, prices falling in San Francisco. All right. I love it. Cool. Well, I love it. I think I've covered everything there for you. We'll be back later. Of course, 8 o'clock there for our customers. If you want to come hang out with us, we'll grab a glass of wine, go over to the speakeasy, and have a good time tonight. Got a lot of cool stuff to share with you. Of course, and the portfolios in the market as well. You guys enjoy the rest of your day. Thank you so much for stopping by, and we'll see you again tomorrow. Do it all over again.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.